Clock go.
Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take. How your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And then remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, well, before we get to our intriguing content today, please join me in welcoming our featured guest and repeat offender on Ron Siegel Radio.
I got a bad feeling about this.
Lucas Smith is in the house.
Hey, repeat offender. Juvenile records are sealed, and there was no video of that, Ron.
And I would say we know about juvenile. Okay, hey, let's see what we're celebrating today. We celebrate National Dog Biscuit Day. Now, you know I like to eat a lot of things, but dog biscuits probably ain't one of them.
Yeah, probably off the list.
My dog likes those. Okay, and now I do like Tootsie Rolls. Not on my diet, but I do like Tootsie Rolls. And another one that's certainly not on my food plan would be National Banana Bread Day. Now, I like banana bread. Now, throw a little, you got the walnuts in there and everything. I've had I don't know who has made it for us, some banana bread with chocolate chips in there.
Little butter
Throw
on it.
A little butter on it. You
toasted.
can't go wrong on any of that. Okay, now that I better stop drooling, because I did have, one of the things you learn when you are very, very involved in the shot community, in getting rid of some of the extra baggage, as I call it. My bariatric doctor says people of size. So yeah, and probably too much size.
You mean when you're releasing weight? I did have a little
bit of excess in some of the carbs yesterday, and as the doctor puts it, when you do that, you pay a price. That's also known as deterrence, because you don't want to have it happen again. So I will throw that out there. If you want more information, rsrlinks.com/shot, rsrlinks.com/shot. You can follow my journey, and there's a lot of other folks that have gone on the journey with us, so I enjoy that. But hey, let's see what the markets are doing today. The markets, do we want to look at what the markets are doing today? The Dow Jones Industrial Average is down 725 points. Ow! Yeah, the NASDAQ is down 268 points. The S&P 500 is down 69 points. Oil's down 11 cents a barrel. I wonder why. Gold is up $100 an ounce, 52.09. That'll come back down. And I'm looking, the 10-year Treasury, I don't believe the numbers because they're looking a little funny to me, because it says that down, that makes sense. Down 6 basis points, the 10-year Treasury, 4.025. Wonder why that's happening. Can you say Iran, boys and girls? That's probably the issue. And when I look at it, the mortgage bond, it's up 15 basis points. Remember, when the bond goes up, rates go down. Why is that happening? Well, it doesn't have to do with Iran, but it has to do with something I tell you all about all the time. The markets, number one, they always overreact. And we watched on Friday, we got that pretty goofy ruling from the Supreme Court. And I know it was 6-3, but you look at it and you wonder, why do I say it's goofy? Well, number one, the biggest question anybody had is, are the tariffs legal? Well, there's a lot of precedent in there that says the tariffs are legal as far as historically. Now, when the Supreme Court rules that they're not legal, why don't they put in something about keep the money, give it back to the consumer, give it back to the company, give it back to the country that sent the product, who are you giving it back to? No, the Supreme Court did half the job. Unbelievable. That's a whole... Okay, Debbie, I want to know what this means. Do you ever think a gallon of milk would cost more than a gallon of milk? I'm thinking you're probably talking about a gallon of gas costing more than a gallon of milk, but I'm not exactly sure what you mean there. Put that in the comments for me so I can understand that. But hey, we're in California. A gallon of milk doesn't surprise me because they will tax us on anything here. But I digress. So the market is happy that now they know that the tariffs that were in place under the international powers are not an international emergency. Wow, interesting. Okay, but the president just says instead of the 10% across the board, there is other authority to do 15%, which the Supreme Court left in place. Does that make any sense to anybody? Why would you say, no, you can't do it on this hand, but you can do it on that hand, and not clarify any of this? But that's what they did, and that's why I say it is a goofy ruling. But we deal with that, but at least there's the certainty is there. We don't have to worry, are the tariffs going to come back, or are they gone? Are they not gone? President got the win, but you listen to the Democrats, and they won't let that happen. They say that he lost in the Supreme Court. He did on the one area, but they said the other ones are all fine. So you got a goofy setup right there. But what's really going on is the issues in Iran. Now, we talked about this before. We knew that there would be no attack on Iran during the Olympics. Okay, so we can check that one off the box. Now, we're not going to see an attack right now, today. Probably won't see anything until late tomorrow night at the soonest. Why? Because the president doesn't want to disrupt the State of the Union address, which is tomorrow. So we're not going to see anything happen there. Now, would the president disrupt the Democrat rebuttal? Now, who knows about that one, right? But Iran is getting very, very close to enriching their ballistic missiles. And they think that they're going to play with this president. I don't think they will. But when you look at it and you say, okay, well, oil is down 15 cents a barrel, that doesn't mean the market's that afraid of it, although it is up about $8 a barrel from where it was. But you are seeing, when you see that the 10-year Treasury is down 6 basis points on the yield, what does that mean? It means there's a lot of people buying 10-year Treasuries. When the price goes up, the yield goes down, and that's what we're seeing right now, is that yield dropping. Now, we're also watching, because this is a home and finance radio show, the mortgage bond is up 15 basis points. It's a little bit above resistance, not a lot. We haven't been able to break this resistance level. That's been a very, very tough one for us to get through at, guess what? Par 46. Guess where we're sitting right now? Par 46. So we'll see what happens on that one. We're going to keep watching all of these things for you. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, we're going to chat with Lucas Smith about getting in the real estate game. Should you? We'll talk about it. And we're going to talk about how your equity could help younger generations buy a home. Ooh. Insurance needs. We'll talk about that as well. If you are a young couple, maybe just had a baby, are your insurance needs the same today as they were pre-baby, pre-wedding, pre-house? We'll talk about that as well. You can reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app, and every day at this time will be MMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you put in your mortgage calculator to determine if your principal and interest payment, what that's going to be. And that's the only number that really matters. I love it when they talk about APR. Like anybody cares. And those of us that understand mortgages and understand mathematics. Now, a lot of people don't study math and they just say, okay, got to know the APR because that's what they tell us. Want to manipulate the APR? It's very, very simple. The APR is developed by figuring out what the principal and interest payment or the interest rate is. Okay. You get a principal and interest payment. Then you put in the costs of the loan. Okay, that's pretty simple. And then the variable. It's called interim interest. How much interim interest is there from the closing date till the start of the loan, till the next payment? Okay, so if I'm doing the loan, or if somebody else is doing the loan, they may say, okay, I'm going to put in interim interest. I'm going to say that we're planning, it's late in the month right now, so we're not going to close until April 1st. That means, we're looking at 30 days of interim interest. Now, if I say that we're going to close on March 31st or March 20th, March 31st is a better day, guess how much interim interest there is? 1 day. So one way you've got a full month's worth of interim interest. The other way, you've got 1 day of interim interest. Guess what APR is going to look better? Just
1 day.
Throw that out there for you. Now, let's look and see what the rates did on Friday. They just went away from me. Friday's rates, there they are. Looks like mixed bag. Conventional 30-year fixed, 5.979. That was down. Jumbo 30-year fixed, 6.104. That was down. FHA 30-year fixed, 5.883. That was down. VA 30-year fixed, 5.648. That was up. And the USDA 30-year fixed, 5.794. That was up. If you want our thoughts about the market, join the Ron Siegel Radio community. It is free to you. rsrlinks.com/HBOD. rsrlinks.com/HBOD. We put our thoughts of the market each and every business day morning, but let's see what the markets are doing today. Well, we're going to look and we see, as I mentioned to you before, the S&P 500 is down 70.23. We've got the 10-year Treasury is up 6 basis points. That's at 4.027. And the mortgage bond stuck there at up 15 basis points. Be aware that the markets are not going to have a lot of activity today just because there's a lot of bad weather on the East Coast. And even though a lot of it there's a lot of electronic trading, one of the services that I use, they're not even getting any quotes right now because of the bad weather. But let's see what's driving this stuff. The numbers I just gave you, you can find that on the super secret website. I might have to change this at some point in time because the super secret website, google.com, now could be called ChatGPT, Gemini, Claude, Perplexity, or any one of a number of other names. So we're all watching this. Bonds right now against some very, very tough ceiling of support, tested several times, only to be pushed lower. If bond can break above the ceiling, 50 basis points of room to the upside. We like that. Fed Governor Waller spoke recently, sharing his thoughts on the latest jobs report in the upcoming March Fed meeting. Waller is very analytical and shares a lot of the same reasoning we talk about on Ron Siegel Radio. He dissented at the last meeting, wanted another 25 basis point cut. Yeah. He feels the January jobs report was inaccurate and will be revised.
Surprise, surprise, surprise.
He pointed the revisions to 2025 only showing 15,000 jobs created per month on average. He also explained that the QCEW revisions only go through March, and when the other 9 months are factored in, he thinks we'll see job losses for the full year. Waller thinks it's highly unlikely that in January we saw more job gains in the previous 9 months combined.
Such an idiot.
Of course,
Such
he's
an
right.
idiot.
The jobs report it's worthless. He thinks January's job gains will be revised lower, just like we saw in 2025. Waller also highlighted the negative 13,000 print in Revilio and 22,000 job gains in ADP, huge cuts in Challenger and job openings that fell sharply. He said the 1 month of strong BLS from the BS from the BLS jobs report does not make a trend, but if February is stronger again, he may opt to pause in March. Sounds temporary. Many Fed members are obsessed with inflation being too high because they can't see the trueflation reports. All they see is the BS from the BLS. Waller thinks that underlying inflation is at 2% when removing tariffs and housing lag. He thinks the decline in inflation alone, even if labor rebounds, may be enough for a cut. We don't think there's going to be any cuts until we get the new Fed chair, Kevin Warsh, and that'll be June. So I probably won't see anything until then. That is the Mortgage Minute, brought to you by our friends, rsrlinks.com/mobile app, rsrlinks.com/mobile app. So let's talk with our friend Lucas Smith. He is in the house. Sell My Home Real Estate, name of the company. I think it's also the name of the website, isn't it?
It's the name of the company, name of the website, name of my email, Lucas at, right? You can just get me anywhere there.
Especially because, Lucas is a simple guy, so he just makes it all the same thing.
That's right. That's right. I was never complex, Ron.
So let's talk a little bit about real estate.
Okay.
And,
I know something about that.
Yeah, a topic you're well aware of. So tomorrow we start the portal opens for the Dreams for All program. And that's a shared equity program for those that don't know. Shared equity between the state of California and a first generation home buyer. So one of the new twists in there is that you cannot have owned real estate before, and your parents cannot have owned real estate before. So that's kind of a new twist in there. It's $150 million put out there by the government. So they think it's going to be about 2,000 loans. But before we talk about loans or any of those things, the first question you got to know, because every individual is unique. Lucas, what are your thoughts? Because, I know you're a real estate expert. Guru. I hate to say expert because whenever you say expert, people want to punch holes in there.
I know. Educator. I'm a real estate educator. I educate people about real estate.
So should a young family, first generation, buy real estate? Is the first
Yes.
question. Nice and easy answer.
Yes. Reason, right? It's the number one path to generational wealth in our country.
Okay.
Right? It creates stability for your family. It creates generational wealth.
Now, what's your thoughts on this argument that it's cheaper to rent than it is to buy?
Of course it's cheaper to rent right now, right? But we talked about interest rates. You talk about interest rates a lot, right? So what's the interest on rent, Ron?
100%.
100%, right? So even if you have an 18% mortgage,
Which I did in 1983.
which you
when I
did
bought
in
my house.
1983, right? My folks did as well, right? That's
Are
still
you trying to say that I'm as old as your folks?
82, almost. That's still 82% cheaper,
Sure.
right?
Okay.
Than rent.
And how much wealth is built through rent?
None.
No, it's built for the,
Well,
for the
okay.
landlord.
So I have a fun saying, either you're paying your mortgage or you're paying somebody else's,
Exactly.
right? You're always paying a mortgage. People who say, oh, I don't want a mortgage. Well, you're paying one,
Do you
right?
laugh about this? A simple aside. So I went into a group meeting and I was doing a presentation. I was a keynote speaker. And I said, who here is paying a mortgage? And about 60% of the room raised their hand.
Right.
So I said, okay, now the other 40%, now you put your hands up. How many of you are living with mom and dad? Keep your hand up if you're living with mom and dad.
Right.
All the hands went down.
All the hands went down.
I said, okay, so now either you're paying somebody else's mortgage or you're building their wealth because they've paid off their mortgage.
Right. But people don't get that, right? Because in the moment, and I think we talked about this before, in the moment, rent might appear cheaper, but it's really the more expensive play.
Exactly, without a doubt. Now, you're with whenever you have even if you're doing the Dreams for All program, and I say that is a last resort program,
right?
Right. I mean, if you could make the down payment yourself, why would you want to be a partner with the state of California?
100%. Right.
If you can't make the payment, if you can't qualify on your own, then that is another option.
Yeah, if you can't do the down payment or do the qualification on your own, do an option that's available for you, but make sure that you're working with a professional, right? Whether it's us or somebody else who's able to present that option to the seller in a way that's amenable to the seller.
Why would it not be amenable to the seller?
Well, because a lot of people don't understand these programs, Ron. So they think it's a less qualified or a weaker buyer or somebody who has more chance of falling out of escrow, right?
Oh, okay.
The seller wants certainty. Right.
Okay.
When you're selling a piece of real estate, you want 100% certainty or as close as you can get that buyer is going to close that deal at the end of escrow. Yes.
Sure.
Right. And if you don't have that certainty, if it's not presented to you in a fashion that you can clearly understand it, then maybe you're less certain and maybe you're going to go with another buyer, even if they're paying you a little less money for the house.
So here's my question to you that we're going to have to, I'll put the question out there and we got to go to break. But why would anybody care as long as they know that, whether you're getting a full cash offer, you're getting a VA loan that's 100% financing, whose job, what is the odds? Because I talk on Ron Siegel Radio a lot that the vast majority of real estate agents are not really qualified to be doing real estate.
Well, I'm glad you said it, not me.
There's that 20 to 30% that are really, really good.
Yeah.
And know what they're doing. But you got a lot that don't have any clue. I want to talk to you about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets, how your equity could help younger generations buy a home, and insurance needs assessment. We're going to talk about that as well. You can reach me anytime. Off-air number, 800-306-1990. 800-306-1990 or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime. At 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com. rsrmoney.com. How your equity could help younger generations buy a home. For a lot of parents and grandparents, watching a family member struggle to buy their first home right now is hard. That's because you saw firsthand how home ownership gave your life more stability and helped grow your net worth. And you want your loved ones to have those same opportunities. But with all the affordability challenges in recent years, that can feel like an uphill battle, even though it's slowly improving lately. Here's what you may not realize. You may be in a unique position to help thanks to the equity in your current house. The equity advantage you may not be thinking about, you've likely owned your home for years, maybe even decades. And during that time, two things happened. Home values rose, your mortgage balance shrank, or you paid it off entirely. That combination has created substantial equity for many homeowners like you. And while you think of that equity as something you want to have in your pocket for retirement, it can also serve another purpose, helping the next generation clear the biggest hurdle in their way. The number one thing holding young buyers back, when John Burns Research and Consulting asked renters what's keeping them from buying, the top answer wasn't mortgage rates. It was not home prices. It was the upfront cost, particularly saving enough for their down payment. And if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk, AM 1490, FM 98.1 video feed, you are seeing a chart that says the down payment is the biggest obstacle preventing renters from buying a home. That's where you may be able to make more of a difference than you realize. You can't control rates. You can't control prices. But you may be able to use your equity to help with this upfront expense, and giving money to your loved ones so they buy a home doesn't mean putting your own future at risk. Even a small portion of your equity can put them in a position to finally get the keys to their first place. And if you're strategic about it, you'd still have a lot of leftover for when you retire. With an estimated $68 and $84 trillion of wealth expected to transfer from older generations to younger ones over the next 2 decades, many families are already thinking differently about when and how that wealth will be passed down. It may make sense for your family to think about it too. Now, I will tell you, our Wealth Builder program, how about helping your kids or grandkids buy a house? You become the landlord and they can have an interest-free loan. Help from loved ones is making a move possible for many first-time buyers. A growing share of young buyers are using gifts and loans from their loved ones to springboard into homeownership. According to the National Association of Realtors, nearly 1 in 5 first-time buyers use a gift from their family or loved ones for their down payment. And other young buyers are using their inheritance or a loan from someone they know to finally break into the market. Another chart showing for more first-time buyers are getting help from family. 19% use money from an inheritance. 8%. How about an inheritance advance loan? Ever hear of that one? No, probably not. Received a loan from a relative or friend. 3%. Think this is about opportunity, not obligation. Every family situation is different and your decision should be made carefully. It's just that if you've built up a lot of equity, you may have more room to help than you think. It's not just a financial gift, it's giving stability, security, and a foundation that could change their lives for the better, especially at a time when they may not be able to do it on their own. Bottom line, if you're curious what your home equity could make possible for you or your loved ones, it all starts with a simple conversation. Because sometimes the most meaningful investment you can make is for the next generation. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. And that is the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com. We continue our conversation with Lucas Smith. He's in the house today, and we are checked. Yeah. Don't give him too much applause. Okay, so Lucas is in the house. We're talking about, before the break, we were talking a little bit about the Dreams for All program, which the portal opens tomorrow. It's only open for a couple of weeks, and you must have a pre-approval letter before you can even register in the portal. So if you need to get on the road with that, give me a call again, 800-306-1990. But Lucas brought up a great point in the last segment, and we're not going to repeat the whole point, but I'm going to just summarize that you need to have a real estate team that understands whatever the programs are. I mean, I'm dealing with somebody right now with a VA loan. If they don't understand, if the real estate team, that'd be the buyer's agent and the listing agent, if they don't understand it, how are they going to educate the sellers? and especially when it's something that's kind of unknown or might have a bad reputation even.
Right.
So I say this, Lucas, I'm not putting words in Lucas's mouth. I think about 70% of the real estate agents are not qualified to do anything in the world of real estate. I can say that because I've had a real estate license for 11 years, and I am not qualified to write a real estate contract. It's not what I do. I needed it in order for a mortgage company that I worked with that was governed by the Department of Real Estate. So I had to get a real estate license.
Right.
And I can tell you that there is not one thing, well, maybe there's one, but very little on the real estate exam that has anything to do with what's done in real estate today.
Nope.
So Lucas, as an educated and an intelligent and a practicing real estate professional, how do you deal with the ignorance, quite frankly, that's in the industry?
Well, that's a great question, Ron. And I'll tell you, I have some great people on my team. And one of the things that I tell my assistant, my transaction coordinator, when I hire them and I train them and I have them go through all the education, as I say, there's going to be plenty of times we're doing a transaction where you're going to know more about the transaction and about what's going on than the other agent.
Sure. Yeah.
Right.
Absolutely. The funny line in the industry that I hear from the lending side is if you've never experienced that, you probably are that.
Right. Yeah. Right. Exactly.
Right? If you've never experienced having to do the work of both sides, probably somebody else is doing your work.
It's like the saying in poker: if you can't spot the fish at the table, it's probably you.
Right. There you go. So you're basically having to do both, educate both sides.
Well, and how can a buyer protect themselves from that? Because they don't know, right? It
Right.
looks like that person is the same on the outside. So know some of those basic questions, right? I met with a VA buyer the other day, and he said, look, I had another agent. I was working with them. They didn't know a lot about the VA programs. Tell me what you know. So I started talking to him about VA programs, qualifications, what he needed to do, right? I educated him a little bit about some things that he didn't even know about, being a veteran, about the programs that were available for him, right?
And
So
most veterans, I'll tell you this, because I've done a lot of work in the veteran world. In fact, if you want a full education on the VA loan, rsrlinks.com/VA loan, rsrlinks.com/VA loan. There's so much. The veterans are not really educated.
Right.
They get a 20-second or 30-second blurb on their way out the door, and they're more excited to get out the door
right,
than to buy a house.
right. But they want to use that benefit, and I want to support them because I
Sure.
love our veterans. I love those who served our country, and I'm honored to get to serve them.
Sure.
So it's my duty, it's my job then to educate myself and know. So I don't watch any of the fake news channels, right? I don't care which way they lean politically. I don't watch any of those. But I do subscribe to all of the real estate blogs. I subscribe to the lending news channel, right? I watch all of the news
Your
pertinent
industry.
to my industry because it's my job to be educated about what's going on,
Sure.
right?
Makes a lot of sense. And I can tell you this, as a lender, that I did my first loan back in 1983. A lot of people aren't even born then. The VA loan is a spectacular loan, and there's a lot of areas in the VA loan. In fact, just this weekend, I had somebody say, well, how long are VA loan appraisals taking right now? And I said, well, there is a duty within the VA. If you want to be a VA appraiser, and they call it a certificate of value in the VA
Yep.
world. But if you want to be able to perform that, you have to commit to timeliness. So how do you define timeliness? Well, in this area, timeliness is defined as 7 days.
Right.
So that was what it was in that part of the country. And, most people, the agent wanted to know, how long is it taking?
Right.
Right? They don't know these things.
And I can't speak to everybody's experience, Ron, but I can tell you when I got into real estate 16 years ago, right? It's when these things right here were first coming out, right?
Sure.
People had smartphones. And I quickly came to understand that the consumer was easily more educated than I was, right? On a lot of things.
Sure.
So that's when I had that aha moment and started really studying and becoming a student of the industry. We have a saying in real estate. You can have two agents who've both been licensed for 20 years. One has 20 years of experience and one has been doing 1 year's worth of work 20 times over.
Sure.
Right.
And that's not just real estate. I think it's any industry.
Sure.
There are those people that really take their craft seriously and stay on top of it. And there are those people that are just there to, in real estate especially, they're there to get a discount commission.
Yeah.
And generally, I find you get what you pay for.
Yeah.
Right. In fact, I teach people all the time that if they want a 7% commission, they're going to get, if they do it the way we educate, they're going to get more money for their house than they're going to get from that person that's giving them a discounted rate, 1% or flat rate or something like that.
And ask for that person's track record.
Sure.
Right. When I go into a listing appointment, I talk to a seller about it. I show them my numbers, right? Where I'm going to get you an average of 4.5% more for your house than the next guy.
And that's what they're really looking for. Think about this. So let's see, get 4.5 more for the house and pay you what you're worth versus getting maybe a 1 or 2% discount and losing money out of my pocket.
Right. So you're going to lose 3% or you're going to make 3%.
It's just kind of crazy when you think about these things. But we're going to continue our conversation about maximizing your sales price. Getting into we go on rabbit holes when Lucas and I get together, but that's the way of Ron Siegel Radio. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, more with Lucas Smith and insurance needs assessment, all that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1 on YouTube, Ron Siegel numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Borrow Smart segment today being brought to you by GetHomeSelect.com, GetHomeSelect.com. You got married, you bought a house, you had kids, life is full, life is busy, and somewhere between soccer practice and the mortgage payment, something got left behind. Your insurance. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. And today I want to talk about something that most people set it up once and never look at it again. Their life insurance, or their insurance in general, not life insurance, their insurance in general. Here's the thing. When you were single, a basic policy probably worked just fine. When you got married, maybe you updated it. But once the kids showed up, the financial picture changed completely and your insurance needs to reflect that. Let me walk you through this. First, let's talk about your home. Your homeowner's policy needs to keep up with your life. Think about everything that has accumulated in your house since you first moved in. Your kids' electronics, the furniture you upgraded, the jewelry, the artwork. All of this has value. And if something happened tomorrow, would your current policy actually cover it? Maybe, maybe not. Costs to rebuild have also gone up significantly. Debris removal alone can be a surprise expense people never see coming. And if your income has grown, your liability exposure has grown too. It's a good time to look at an umbrella policy if you don't already have one. Second, health insurance. Once you have children, you need a family plan. Sounds obvious, but I have seen couples carry separate plans for years just out of habit. Sometimes one plan is clearly better for the whole family. Sometimes combining saves real money. It's worth a conversation. Third, disability insurance. This one doesn't get enough attention. If your household depends on two incomes and one of you cannot work, how long before things get difficult? 30 days? 60 days? Disability insurance replaces income. And if you already have a policy, but your income has gone up since you got it, the benefit might not be enough anymore. Worth reviewing. Now, let's talk about life insurance. I know nobody wants to think about it, but here's the reality. When you have children, you are not just protecting a spouse, you're protecting a future. college, daycare, a mortgage, the life you have built together. The amount of coverage you need is based on how old your kids are, how much you owe, and what your family's standard of living looks like today. And here's something people forget. If one spouse stays home full time, they need coverage too, because if that person is gone, the surviving spouse is now paying for childcare, after-school programs, housekeeping, and potentially turning down career opportunities because single parenting demands it. That has real economic value. Do not overlook it. I always encourage families to shop their insurance policies regularly and review their deductibles against their current financial situation. What made sense when you first bought that policy may not make sense today. I work with trusted insurance professionals who can give you an honest second opinion, no pressure, just a real look at where you stand. So what does this mean for you? It means take 15 minutes this week and pull out your policies, look at the coverage amounts, look at the deductibles, ask yourself, does this still fit my life? If you're not sure where to start, rsrlinks.com/keysteps, rsrlinks.com/keysteps. It's a simple tool to help get your financial house in order, including knowing where your insurance stands. Because strategy beats rate always, and the right strategy starts with protection. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment, brought to you by GetHomeSelect.com, GetHomeSelect.com. Continuing our conversation, we are chatting with Lucas Smith. He is a real estate guru. Sell My Home Real Estate is the name of the company, the website, the email address. I think it might even be on over the door of the restroom, but I'm not going to go there with it. But Lucas Smith,
all marketing is good marketing, Ron.
That's it. It's all good. But we're chatting about getting into your first home, and Lucas, do you help a lot of first-time buyers?
We love helping first-time buyers. It's one of the blessings that we get is to help young couples. I have a couple who's in Mexico right now. They got married 2 days ago. We put them in escrow the day before their marriage, the day before their wedding.
Nice.
Yeah.
I hope
Isn't
they're
that
safe
awesome?
and not stuck there. I mean, I know a gentleman I am very close with. He's stuck in Puerto Vallarta right now and under the lockdown. So
right. No, I don't think they were in Puerto Vallarta, but yeah, I think they're further south. That's where her family's from.
Beautiful. So, but the bottom line is you hope they're safe and come back and they're in escrow right now.
Right.
They're going to have their first home.
Yeah. Isn't that amazing?
Yeah. And you know something? I say the most exciting loan I've ever done was a 100% service disabled veteran and his wife who did take care of his aid and attendance. And they had their military incomes, and that was their entire amount of income they had. Mm-hmm. And we were able to get them a home loan because something you and I talked about off air, the VA wants the veterans to own their own home.
Right.
They served, they earn it. We get ours because of their service.
Yes.
But I mean, a first-time family buying a house, it's
exciting. Amazing. It's amazing. Now, you mentioned something in your last segment that I wanted to bring up and bring forward a little bit because we're talking about first-time buyers. And we were talking about things that you read. So I was reading an article the other day about giving your kids their inheritance ahead of time.
Sure.
Right? Helping them buy a house, not just handing them money.
Right.
Right.
Go and buy a new
but
car,
be
boat.
Intentional, a car, boat, motorcycle, right?
Right.
Be intentional about it, right? Help launch them now with part of that money that you're holding on to for them later, right? Because it's going to help them more now at 27, 28, 30 than it is when they're 50.
Now, I look at it from an old man standpoint because I do like the idea of helping the younger generation. But my recommendation in most instances is do it as a second on the property.
Right.
Because we do live in California.
Right.
And we have, even though nobody is part of this group, not one person I've ever come across as part of this group, 70% of first-time marriages end in divorce.
Right.
And that way, you know that if they are that by chance, unfortunate, it happens, you're the old generation.
Right.
Your job is to make sure and look out for the unknown because the younger generation, everything is champagne and caviar.
Right.
So do it as a second mortgage.
So do it as a second on their property. So you're the second line lien holder.
Right.
Right. And that way, if something happens, there's a split, the mortgage can't be paid on the first.
Right.
Then you take responsibility for the first as well.
And you also have room for your blood relative. If they decide they want another property, that's still available to them and it's not part of the community, the marriage community.
Makes good sense. Yeah.
I am a certified divorce lending professional, so I went through those courses. And it's just something we talk about because, there is a lot. It happens a lot.
It does. Unfortunately, right? It doesn't always work out. But
Right.
I think that's wise.
And I don't know
Guarantee
about
your
you,
money.
Lucas, but I know when I was in my 20s, I was pretty stupid.
Oh,
I think most men in their 20s are.
Oh, I thank the good Lord above that he brought me here every day, right? I get to be 54 today, right? I don't know how.
Right, exactly. So, and I'm a little older than that. So I look at it and say, thank goodness I grew up in the days when there were not mobile phones or smartphones.
Oh, yes.
There is no record of what we did.
The evidence would abound, I promise you.
So tell me what your thoughts are. I mean, in the last go round of the Dreams for All, were you involved in any of those?
We didn't get the opportunity to help anybody who was involved in the program, but we did have a couple people who tried to qualify.
Okay.
My wife is a first generation immigrant here. She immigrated here from Mexico when she was a teenager. So she's really involved in helping people, right? Especially from Mexico, first and second generation buyers buy homes.
And something, that's the American dream.
It is.
No matter
it
what
still
somebody
is.
says. Yeah,
no matter what anybody says, that's still the American dream.
And something, I watch all these things, these programs and social media, conflating the immigrant that comes here through the proper channels and is just a real hardworking individual looking to make a better life for their family.
But look, that's what this country was built on.
Absolutely.
Ron, I advocate that.
Sure.
100%.
I think most of us do.
Right?
The only place it doesn't is the media.
Right.
But we don't want to get into that.
We won't. No, that's a whole nother, right.
But I mean, I know so many people. My wife and I helped one young lady, go through her citizenship process. Unfortunately, the attorneys are shysters there.
Oh, they're rotten. They're terrible.
My in-laws helped somebody go through that whole process. And something, both of those families are thriving.
Right.
And it's wonderful to watch.
Right. And the sad part is, and we won't go off on this tangent too much, is I think the system has gotten so overwhelmed and inundated that it hasn't left enough room for those people who want to follow the proper channels.
Absolutely.
Right. And that's the sad part for me.
It is. And I'm glad that you guys are out there. I love helping first-time buyers the same as you do. And something, I've said this even during the days of the Great Recession, is there are no bad loan programs.
No.
There are bad applications of loan programs.
Yes.
But every program that I've ever seen come out, there's always been a good application for it. It came out to meet a need.
Yeah, there's a great purpose for it. People just abuse it.
Right, exactly. So I'm going to share right now that if you're thinking about getting a home and you don't have the down payment money, you don't think you can qualify, give us a call. Lucas will help you go out there and do that initial consultation and see where you start. Our team will help you see if we can get you qualified. And obviously, any real estate professional that either puts you in the car or starts showing you property before you've been pre-approved, and as you see with our team, we call it certified buyer program.
Right.
Unless you get a certified buyer program, it's malpractice for an agent to go out there and send you looking at properties, because I'm not going to throw this one at Lucas. I'm just going to tell you, I've looked at hundreds and hundreds and hundreds, maybe thousands of pieces of real estate. I can never remember in my lifetime seeing a $2 million property that was not nicer than a $500,000 property. Both properties are great for their consumer. And I say even somebody that's buying a $200,000 mobile home, that's their castle. But if you go out and start shopping above your means, you're not going to be as excited as if you're shopping at your means.
It's going to be really hard to go back.
Right.
And I'm going to give you one further. Anybody who's going to put somebody in the cars, take them out, start showing them homes without sitting down and taking a few minutes to have a consultation with them and talk about where they're at and what their needs are.
We call it a dreams and goals call.
Right. Yeah. What their needs are and what's realistic for them. You're not really doing them a service.
Absolutely.
Right.
So if you want more information on this, or you want me to meet Lucas Smith, give me a call at 800-306-1990, 800-306-1990. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, Call me anytime, 800-306-1990, 800-306-1990 or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.